Welcome to Deluxe FX Portal. I am Steve, the digital presenter of Deluxe FX Portal, a leading trading educational company owned and managed by Nelson Onyovosa. In this video, I will be breaking this pair down from a technical and order flow perspective to try and understand where we will be having highest probabilities of the next potential move. And in doing so, I will provide free education as free as possible. Disclaimer: it is important to know that all our accounts on different social media listed below uses only the name Deluxe FX Portal. There are no numerical digits attached to any of them. Let's go straight to the charts. Okay, so let's make a full breakdown of the situation that we currently have for USD, CHF. Starting here from the monthly, we can see how the market has just printed a very strong impulse to the upside followed by this correction. In general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can notice how the market at the moment is testing the 0.618, which is the golden ratio, and has already started rejecting it to the upside, and we could expect more potential bullish continuation to develop from here. Dropping down in the weekly time frame, what do we see? From a weekly perspective, we can see how the market had previous lows in this area. From here, all this move to the upside was created. Here, the market tested its zone and rejected it to the upside. At the moment, the market is testing the exact same area from which we could expect a potential rejection to the upside. We can also notice how we just had a strong impulse followed by this correction. In general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just tested exactly the 0.618, from which also here we would expect a potential rejection to the upside and also for the market to complete this inverted head and shoulders. If we go and see what we have when it comes to the commitment of traders, the COT data, which is what the non-commercials, the biggest speculators in the market are doing, and we check the data specifically for the CHF, we can see how with the last reports, net positions have decreased, indicating how the positioning of institutional perspective is shifting to the negative side, with more shorts getting added and longs getting decreased. This is overall bearish for the CHF, and a weak CHF is exactly what we need if we are to create this reaction to the upside that we already wanted to see from the monthly and weekly. If we go down the daily time frame, we can notice how if the market here will create a nice move to the upside, at that point, it would create this W formation. And in general, after the creation of a W, we would like to see first the completion of the neckline and then the continuation higher for the completion of the impulse correction and impulse pattern to the upside. So at least from a pattern perspective, what we would expect here is a little bit more bullish price action than rejection to retest this level and then a continuation to the upside. So if we actually get this break to the upside above this resistance, after a break on the retest of this previous resistance turning to support, how we could be approaching this potential rejection to the upside now. As usual, trading is reactive and not predictive. The monthly, weekly and daily combined with the COT data, those are the best time frames from a directional perspective. But however, when it comes to confirmations and entries, the best time frames are the intraday time frames, the 4 hours and lower. Therefore, if we can get the break on the retest, what we could be doing is monitoring price action from an intraday perspective, potentially also with students at the Deluxe FX Portal, during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have now to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the